I want to point out to this golden cross that we are about to have right now with the 200 and 100 daily moving averages. The 200 is the purple one and the 100 is the yellow one. So once this yellow moving average crosses above the purple moving average, we are going to have the 4 standard moving averages in sequence, which means from the smallest to the longest in sequence. The red one is 20, blue one is 50, yellow one is 100, and purple is 200. These are the standard moving averages that traders use. I mean, I'm using this indicator, which it's called all moving averages in one single indicator, and you can see you don't even have any settings to choose a different length moving average. You see the standard is the 20, 50, 100, 200. You cannot even change this number because these are the standard moving averages used in trading. Of course, as a trader, you can use different numbers, different settings, but the standard ones, if you study classic technical analysis, the standard moving averages are always simple moving average, 20, 50, 100, 200. These are the standards I always use. All my indicators are standard always. I don't play with the settings, because in my opinion, when people start playing with the settings of the indicators and they don't use the standard ones that are used by actual professional traders, which are the ones you learn in the books, when people start playing with the settings, it usually means that they are trying to fit the indicator to their own bias. If you start adjusting numbers here and here to make it fit your bias, like if you think the price is going to go up or down, you kind of start playing with the settings to make it fit your bias. To me, that's not good. So I always use indicators like the standard, like you learn it from the books if you study classic technical analysis. So anyways, as you can see, soon when we have this golden cross here, we're going to have all the moving averages in sequence from small to big. We have the price doing higher highs and higher lows, and this is from the books what defines a bull market. When the 4 moving averages are in sequence from the smallest to the biggest one, from top to bottom, and the price is above all the moving averages and doing higher highs and higher lows, that is what defines a bull market. Like, that's a textbook bull markets in classic technical analysis. So this is going to happen soon. Now this is going to be a sign of an early bull market, but of course there's another rule in trading, and it says that during bull markets it's okay to buy the golden crosses, but you don't buy when the price is so extended from the cross. When you see the golden cross, if the price is very extended from the cross, you need to wait for a retracement, and ideally, like the ideal situation to enter long on a golden cross is when the price bounces into the cross. So I have an example here. This happened on Bitcoin Cash recently. I'm again on the daily candles, and we had a golden cross here with the 200 and the 50 moving averages. Let me hide all the lines here so we can see it better. So you can see here when the cross happened right here, the 27th of April, the price was a little bit extended, but it was approaching the cross. So I gave a warning on the Telegram groups, on my private groups. For the record, is here. BCH is approaching 200-day and 50-day moving averages, which have already crossed bullish. So it's probably going to bounce into the cross. Okay, so this is the important part here. So I was waiting. The ideal situation to enter long is when the price bounces into the cross, and then you buy the cross here and then you go long here. In the case of Bitcoin, the price is super extended from the cross, so this is not a situation where you want to be buying the cross because the price is too extended. You better wait for a retracement and then you buy it when the price bounces into the cross. If that happens, if it never happens, then you just wait until the price bounces on one of the moving averages, whether it's the 20 or the 50. Something like that. You need to wait for the signs and to wait for the price to start showing signs of bouncing on, on one of the moving averages, and that's your entry. But I wanted to explain, I mean, this comes from the books, guys, technical analysis books. When the 4 moving averages are in sequence and the price is above all moving averages, that's the textbook definition of a bull market. So we're going to have very soon the early signs of an early bull market here. Another thing, just a quick lesson here, as a side note here, when I shared this here, this message, I said here I was going to buy this level, not only because of the cross, but you can read the rest of the message. There was several signals pointing out that was the perfect, entry for a long position here. And I had this guy here, Peter. He's been in my groups for a very long time. So he said here, I think I will wait, but I definitely understand people buying, on these signals for Bitcoin Cash. When he said this, I think I will wait, but I definitely understand people buying. Last time there was panic, I bought very soon. So this time I think I'm going to wait for a bit longer and see what happens. So when I saw this message here, I don't have time sometimes to answer every single message, but I remember, I think it was him who bought this dip here on Bitcoin Cash. If we go a little bit back here, so yeah, we had the capitulation, 200% bounce, and then he bought at around this dip or this dip, one of these two, between $140 and $150 Bitcoin Cash, because I gave the signal. I said I was buying here as well, so I think he followed my my signal. He copied my trade. So we had a bounce here, but it ended up breaking down, and it took forever to finish retracing, and it went all the way down to $100, and then wait forever until he was in profits here on this position. Because I saw capitulation, very heavy capitulation, I saw a 200% V-shaped bounce. My next signal was 50% retracement and consolidate at that level. So because I was seeing signals here that this was starting to look very, very much like a bottom type structure, I was ready to buy at 50%. And if it was gonna go lower, that's fine. Maybe I'll buy more if it goes lower, which I did. And yeah, this actually was also diagonal support here. So I had many signs telling me to buy this dip here at the 50% correction. You cannot get it all right every time. Sometimes the price is going to go the opposite direction. But the lesson that I want to share here is that if you enter a position and you have all the technical signals there and you enter the position and the price goes the opposite direction, you cannot let this experience influence your future decisions in trading. When you have signals later on, you need to act on the signals no matter what happened in the past, so long as you are actually acting on signals and you are not gambling. So here you had several signals telling you to buy this dip. You had the golden cross here, the price bouncing into the cross. You had diagonal support line, which this is a very significant diagonal support here, and it was probably horizontal support as well. Exactly from here, it was horizontal support as well. You had so many technical signals that were telling you to buy at this level. So the lesson here is don't let past experiences influence future decisions in trading. You need to be consistent. You're not gonna get it. The price is not gonna go your direction every single time, but so long as you are acting on signals, you need to continue to be consistent and continue to act on signals no matter how much this situation reminds you to the last situation where you lost the trade or the price went the opposite direction. So I hope this is clear, guys. That's all. Really, I only wanted to share this golden cross that we are about to have here, and explain that this is a textbook bull market when all the moving averages are in sequence and the price is above all moving averages. That is the textbook definition of a bull market.